traders and investors, I'm LA Little, and this is your weekly NeoTA broadcast where we take a look at these markets from a neoclassical perspective, meaning each time we ask ourselves what happened last week, what does it tell us about the coming weeks and months? We have a show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube, and it's under the channel, LA Little. As far as what happened last week, another up week, 0.6 on most of the indexes. NASDAQ index saw some rotation. They finished higher, and a pretty good move in those areas. As far as what can we expect, here's the S&P on a weekly basis. And if you look at this from a consolidation perspective, what you're going to see is there was a consolidation, if you remember, back in 2015, went for pretty much the whole year. That area was about this much in terms of size, right? If you project that forward just using that small consolidation range, you would see prices move up into the 2200 area. As far as on the downside, right, you could see it move back and test into this lower range. In other words, come all the way back down to that 2135 area where it broke out from. So right now the market's on a nice big push up, volume pushing down as we go higher. But you know, at the beginning, a lot of times you see that. Really the key is going to be at some point when this market does retrace, how does it behave when it comes back into this area? Because now you have a big enough push to where when you come back, you should be able to try and hold it. If you look at it on a more micro level, right, on the weekly, on the daily versus the weekly, a nice big push up. The S&P is the only one of the group now of the indexes that has not met its projections. The projection is about 2190 on the S&P 500, so a little bit farther to go on that move. You know, when I look and see that the NASDAQ, the NDX, the Russell have already met their projections, you have to assume that they're going to try to hold, and this one's going to try to push up there. And Friday, that's the kind of action that we saw. If we take it back even one step farther and look at it on a monthly basis, right? S&P 500 on a monthly basis is showing the potential breakout as well. That's the swing point highs. There's two of them. It's over both of them. That's at 2135 area, and then you had this prior high that was a little bit lower. It's over both of those. You can get the exact numbers here. It's 2116 on that one, 2134 and 3/4 on the other one. Over that area, 2175 on Friday. If it holds it the rest of this month, and the rest of this month is not that much farther to go, we're talking about 5 more trading days, then you'll have a breakout on the monthly to the north. And although it's just a reconfirmation, reconfirmations tell you that the trend is still in effect. In other words, even though we had this long consolidation period now for a year and a half, here we go breaking out on another leg higher, and almost no one is positioned for that leg up at this particular time. That of course makes it more likely that this leg up will have some legs, so to speak. That range on the pullback here could be the bottom of the swing point high. It's about 2067 if we were to retrace back down, which actually correlates with this 2072 area on the way up. And so without looking at anything else, just looking at the S&P 500, I think we get a pretty good feel for what's happening in these markets, and that is that you have breakouts, and those breakouts have legs underneath them. Looks like they're going to continue, and there's not a lot of reason to look at much else. You know, you can always look for things that are wrong, and there's plenty wrong, there has been, but you've got the central bankers, you've got the U.S. economy still chugging along, you've got those ingredients that are necessary for this market to move higher still in place, and as a result, equities continue to push higher. That's it for this week. Let's take a look at it next week and see if we have any differences. If we're going to get a pullback, I expect it's going to come pretty soon. Some sort of a small retrace on the daily charts. Now we'll pull that one back up. And that retrace on the daily charts, you know, you want to be able to buy that retrace back into a key area. I just outlined that on the weekly broadcast to members, where I believe that is and where we should be buying aggressively. The first retrace is the best one, and that's where you should be thinking about adding or making some additional purchases. Have a great one. Take care. I'll see you next time. Good night.